The Federal Open Market Committee hiked its benchmark federal funds rate by 25 basis points to a range of 4.5 to 4.75%. With the 25 basis point rate hike largely priced in, markets were looking for clues in the accompanying policy statement about whether the central bank was mulling a pause in its monetary tightening cycle. For now, that doesn't appear to be the case, with the FOMC saying, quote, ongoing increases in rates will be necessary. Joining us now to discuss is ADM Investor Services International Chief Economist and Global Strategist Marc Ostwald, as well as Wolf of Wall Street's crypto trader and investor, Scott Melker. All right, Marc and Scott, thanks for joining us this afternoon. Marc, it looks like the Fed raised rates in line with expectations. What does it say about the Fed stance on the economy regarding Powell's latest comments?
Powell's been quite, in fact, the statement and Powell's comments basically are not really any surprise. They're emphatic that inflation is coming down, but it's not coming. It's still too high. They've got a couple more rate hikes penciled in, very, very decisively. But I think the primary message is the labour market's just much too tight, and that is a key factor in what they're looking at. Nevertheless, there are little chinks here and there for markets to grab hold of, which we've seen with the rally in the S&P towards the end of the press conference. Whether it's actually proves to be the correct analysis, I think one could probably best say that the market's still very much in the mood to fight the Fed, and it's not going to back away at the moment.
The markets are in the mood to fight the Fed. So, Scott, we saw that Bitcoin actually sank in the lead up to the Fed announcement, sinking even further after the announcement. But now it seems to be going up about just over 2% now. Explain what's going on.
2% move in Bitcoin, we just call that Tuesday or Wednesday. I mean, that's the implied volatility of any given day. So it's just encouraging actually to see that Bitcoin has continued to rise and then, trade sideways while other markets are arguably more volatile at different times. But I would say that I agree that the market is definitely in the mood to fight the Fed, whether that's the smartest idea or not. I am not quite sure, but I am quite confident, I've been saying for quite a while, that the bottom is in for Bitcoin. I mean, it would take a massive black swan event, something to really, really rock the confidence of investors, a major platform collapse or contagion with selling pressure to send it below those 15,000 levels that we saw after FTX collapse. So even if we have a boring and sideways year, I don't think that we're going to be testing below those lows.
All right. So Powell said that reducing inflation remains a major goal. Let's have a quick listen.
Although inflation has moderated recently, it remains too high. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation.
Powell went on to say later in the news conference that the disinflationary process has started. Marc, do you agree?
Yes, but he was equally emphatic that they are not happy with this measure that he's mentioned a number of times, core services, ex-housing, that it's not really coming down at great speed. In fact, it remains quite stubborn, and that is something which they're going to be watching closely. So I think for the time being, yes, they basically opened the door very much to the end of this current rate cycle, but they're also trying not to see financial conditions ease much further. I think that the chink that the markets probably are looking at in terms of the outlook is the fact that when asked specifically about financial conditions easing so much, Mr. Powell actually went the other way around and said, as far as he's concerned, they've tightened significantly over the last year, and there are other factors in. There wasn't as much pushback as perhaps some had been expecting, and I think that's really what markets have grabbed hold of.
And Scott, what do you think? Does the macro environment, will it have much of an impact on the crypto markets, or is Bitcoin just doing its own thing?
It definitely has an impact. I was definitely one of the people who said that Bitcoin was largely uncorrelated for the last 10 years and you could buy it as an inflation hedge, and I've been largely proven wrong in that. And I'm the first to admit it. There's no doubt that when you have a bear market and these negative market conditions, the correlations all go to one and everything starts to trade in a similar manner. That said, if you believe that the bottom is in for stocks, we've seen what happens when markets rise. March 2020, Bitcoin bottomed at 4,000. The stock market bottomed, of course. And then Bitcoin went up 16, 17 times while other coins in the crypto market went up even more as the stock market doubled. So if you believe that things are going to improve and that the market has bottomed, that we could enter another bull market, this is the asset class that you want to be in to capture that high beta and really capture all of the upside. But it would be disingenuous to say that it has nothing to do with the macro. You can just see, I mean, it bounces at the same times. It bounces at the stock market open or drops when stocks do. So I just think it's a high beta asset, but on the same general continuum.
Yeah, Scott, we have a chart on Bitcoin handily beating the S&P 500 so far this year. There's a report from Matrix Port saying that Bitcoin will reach 45,000 by Christmas of this year. ARK Invest, Kathy Wood going all out, maintaining their $1 million prediction for Bitcoin by 2030. Are you quite bullish this year?
I'm not so bullish on 2023, but I don't think that doubling to 45,000 is really that bullish of a case. I think that that's well within the normal price action for Bitcoin to double or half in a year, which we've seen many, many times. Now, my heart wants to believe that we're going to get to 1 million in 2030, but my brain is having trouble getting there. Maybe I would have been that bullish in the last cycle when everybody was feeling exceptionally greedy. I would love to see it, but to their point, the fundamentals have not changed. And hash rate continues to go up. Holders continue to go up. There's a passionate community that continues to buy Bitcoin come hell or high water. So I do believe that the premise is correct. It's just very hard to make a price prediction attached to that. I can just tell you that when markets go up, Bitcoin's going to go up a lot higher relative.
No forecast for by the end of the year then, Scott?
I think that by the end of the year, we will definitely touch the 40,000s again. I have no doubt that that's possible.
All right. All right, Mark, interest rate futures markets are currently pricing in a terminal Fed funds rate of 4.94%, suggesting the Fed has another 1 or 2 25 basis point rate hikes left before hitting the brakes. What are your thoughts?
I think markets are still going to have to be disabused of this, but there's sort of, I actually think the Fed really will go to the 5.25 level unless we get some remarkably weak labor data. There's 2 labor reports between now and the next Fed meeting, and a marked fall in that core services ex-housing. But I suppose the key point here is there a huge difference between a Fed funds rate target, which is 4.75, 5, or 5 and 5.25? The markets really, at the moment, with the 2-year yield falling to 4.10, they're basically saying, well, even if we don't get the peak level right, we still think they're actually going to be forced into cutting rates later in the year. And I think that's where the real battle is actually going to be. And that battle is one which is still 6 months away. For the time being, markets can probably just look at this in the optimistic way that they are in terms of rates. But they have one big problem. Basically, what they're wishing for is recession. And if recession hits,
I was just going to ask you about that. What are your thoughts on that? Oh, Mark, are you still with us?
Yeah.
Okay. I was just going to ask you about that. There's a lot of talk about this Fed pivot, about recession. What are your thoughts on that?
I very much doubt that there's going to be a pivot. I think with everything at the moment, we seem to have got into this black and white narrative. It's either we're going to a recession and it's doom and gloom, or we're not going into a recession and everything's going to be wonderful. It's probably somewhere in that space between. But I think really what we'll have is incoming data, particularly on the unemployment side, which is partly a structural issue, which won't encourage the Fed to cut rates any time this year. 2024 is a completely different proposition. But there are a lot of variables in there, which I think it makes it very difficult. But I think for the rate cut bets are the fault in market expectations at the moment.
Scott, I saw you nodding your head a bit. Are you in agreement?
I am in agreement. I don't think that we're going to see a pivot, or that we're going to have to redefine pivot to just easing the tightening cycle, but not going back to actual easing. I think that the days of super easy money and QE are over for a very, very long time. I think that everybody knows that the Fed massively overshot in the other direction, now will likely overshoot in this direction. And frankly, when we've seen a true pivot in the past, that has come months before the market actually bottomed. So if you look historically, not necessarily what we want. I do think that we'll just continue to get a few more raises of 0.25. That's really what's been priced in since September or October. And then we'll see an environment where they just stop basically doing anything. But I do not think that we pivot back to easing. But that slowing of the tightening may be enough.
All right. But we have seen better inflation numbers. The PCE gauge favored by the Fed, we saw a decrease from 4.7% to 4.4% in December. The Bank of Canada said that in the future they're going to be pausing rates. Mark, is that a hopeful sign?
I think it is. I think that. Sorry, go ahead, Mark.
No, don't. Go ahead.
I was just going to say, I think that that's not unexpected, since the Fed has a long history of overshooting, as I said, in both directions. And because the rate hikes of months ago take a few months to be priced in and to see what they actually do. So it's not really important if they're doing 0.25 right now. It's important seeing what happened when they did 0.5 a few months ago, or 0.75 even the months before that.
Mark, you want to add to that?
I think this whole point about where what happens in the immediate future really isn't that relevant at all. I think the bigger problem that we've got is if last year was about rising underlying government bond yields, this year basically has a lot of potential. If we're going to see the earnings recession, which seems to be being signaled by earnings reports we're getting at the moment, then the risk appetite of markets is probably going to change. And they're in a good situation. If the Fed basically does go on pause, then the opportunity cost of holding risk assets actually rises quite significantly when you can invest in 2-year Treasury yields with a yield of around 4%. And that's the biggest challenge of all, I think, for risk markets.
Scott, final question. I know you said that Bitcoin has reached a bottom, but as for crypto contagion, do you think that has settled down as well?
I think it's settled down, but I don't think that it's over. I think that we can expect some more shoes to drop, but I doubt that they're going to be platforms as large or as impactful as FTX. And importantly, we obviously just saw the Genesis bankruptcy filed only a week or 2 weeks ago, and the market didn't react negatively to that at all. So I do think that even if we see more contagion, we have some precedent now to believe that that contagion is already priced in. I think we've seen the worst of it. We will see more, but I don't think that the market cares so much at this point.
All right. Scott and Mark, thank you so much for your analysis. That was ADM Investor Services International Chief Economist Marc Ostwald and Wolf of Wall Street's crypto trader, Scott Melker.